Good afternoon. Today is Friday, May the 5th, and the time right now in Singapore is 1:44 in the afternoon. Now, today is the last trading day for the week, and it's going to be playing a very critical role as far as equity is concerned. Now, since the Fed hike of another 25 basis point on Thursday morning, and we can see how the market reacted. The market actually didn't like what they hear because there was no confirmation of a pause during next month's FOMC meeting, because the market has been pricing basically for the market for the Federal Reserve to pause the rate hike. And if you don't get a rate hike come June, I think the market is going to go into a spasm. So for our time being, we can see prices actually retreat back. In the Dow Jones, you can see prices go as low as 32,937.5. Now we can see that this is exactly 100% pullback from a high of 34,257.8. So this week itself, we can see the market have a new high for this month, and then pulls back in a three-way. So right now, this market is at a critical point itself, because we can see that the price here is actually the equality move. So if the market continue to slide below, let's say 32,800, it would actually cause this market to be in danger of toppling over. The critical level on the downside to me is 32,276.6 in the cash index. Now this is referring to the Dow Jones. Now when we look into the weekly time frame, I'm going to show you the weekly time frame now. You can see that the market right now is in danger of toppling over, because what we see here, now if I expand this chart for you, you can see this is an outside bar. So if the outside bar means this market is in danger of reversing itself. So if the market tonight cannot pull back up significantly, at least half, okay, or what it fell from 34,257 to the most recent low, 32,937.5, then it will be in danger of toppling over come next week. Okay, so do watch out for the potential for the market to be top up. Okay, so on the upside, does it mean that the market is about to topple? Not necessarily, because like I said, this is a equality move to the downside, and of course that being equality move, that means the pullback is already complete at the bare minimum. So from here onwards, we will need to see a sustained rally. If the market can rally beyond 34,257.8, I think that will be the first clue that the market is getting ready to gun for the last December high of 34,712.3. Okay, so these two critical level, which is 34,257 and 34,712, is going to be the upper limit for a bullish case. But if the market continue to dip and close below 32,276.6, then of course the bear case takes precedence. So we have the market right now nearer to the lower boundary than the upper boundary, so do watch out for continued weakness. But if the market can rebound and close above 34,257, that will keep the bullish case alive. So do watch out for this potential move here. In the S&P 500, we also saw a three-wave pullback inequality from 4,186.9 to as low as 4,048.3. So again, like I mentioned, this is a three-wave equality pullback, and this is a bracket of prices that should be able to hold the market. If the market rallies from here beyond 4,195.5, that means the market is resuming its uptrend. So do watch out for this possibility here. Now over in the Nasdaq, the one that will likely lead the bull higher is going to be centered on the Nasdaq 100, because you can see that Nasdaq has registered a new high for the year on Tuesday at 13,287.5. So now the market has a three-way very minor pullback, and right now we are smack within this region of price, which I think it should be able to hold. And if we get a rally beyond 13,287.5, then the market is getting ready to rally even higher with a target at 14,136 to 14,700. So because this market so far has not shown any visible sign of losing momentum, so there is still the possibility the market may actually go higher. So if it's going to be the case, it's likely to be led by this particular index here. So do watch out. Now over in Asia, we can see the Nikkei is still not open. You can see the price has not updated. So they are still having the extended holiday. So we are not be covering this today. When we look at the Hang Seng, now Hang Seng have a bit of a rebound this morning, extending what it did right after the May Day holiday. You can see that the price traded, the high traded was this morning was 20,208. So this could actually see the market consolidating with a little bias to the upside, and it's likely to be capped If the market continue to extend high, it's likely to be capped at about 20,800 to 21,100 levels. So this is going to be the barrier to cross. Now over in mainland, we can see the CSI 300. We have a high point for this week itself at 4,047.6, but it couldn't hang on to its gain and market come back down again. So we will see how the market unfolds. But basically, it's going to trade within these two boundaries. On the low side, we have 3,935 and the upper side is 4,167. Okay. Over in energy, we can see that on the day when the Federal Reserve announced the rate hike, we have a very weird situation in which energy prices went down to a record low for this year with no real fundamentals. So the low traded, this is a year's low so far at $63.73, and mysteriously rebound very sharply to end up in the 4 hours time frame as a reversal bar. Okay, and over in the daily time frame, we also saw the same thing, which also suggests that the market may have already found a bottom, at least for now. So that means we have a very nice buy long setup here. So if the price should ever pull back from a high of $67.77 to somewhere between $66 and $66.75, this area is actually quite conducive to position a long, because from a risk reward perspective, we only have to risk all the way to $63.70 in exchange for a possible rally to at the bare minimum $73.55, perhaps even higher, but I'm going to look for levels to get out at $73.55. Currently, I'm just waiting for the market to pull back to at least $66.75 to actually anchor in a long position. Right now, I have no position. Okay, so in the meantime, we just watch. Over in precious metal, at the same time where crude oil mysteriously went down below $64, we can see that gold also has a similar move, but in the opposite direction. Gold actually rendered to an all-time high at $2,081.46 in the cash market, and mysteriously also reversed, leaving behind a reversal pattern here. So yesterday we have a rebound to $2,059.61. I actually went up, actually went short at $2,055.90, and now I'm holding on to a short position. At the bare minimum, we should be able to see a technical pullback to actually possibly to $1,975. The market may actually go down and test the point of origin, which is $1,950, but I'll be more than happy to exit this short position at $1,975 and stand aside, because long term I'm still very bullish on precious metals. So I'm definitely not going to be holding my short position for too long. Okay, I'll just be happy to pocket my gain at $1,075. Okay, $1,975. So over in silver market, you can see silver has a bit of a delayed reaction, where gold market went to an all-time high on Thursday. We only saw this new high today, this morning, when the market took out the mid-April high of $26.09. We have a marginal high here, $26.14 thereabout. And if gold prices actually pulls back the way I think it will, then I think it will drag silver price back together with it. But do not expect it to collapse. I think the market will be able to find support somewhere around $24.35. So if we have a choice between gold and silver, I think I would love to position a long in silver for the long run. So this will be a great place to actually pick up some more silver and to hold it for over the medium to long term. Okay, over in the dollar, we can see this dollar index is still struggling, but yesterday we have a bounce on 152 to 101.42, and that is exactly where I thought the market will be meeting some serious selling pressure, and true enough, the market could not go beyond this level. So the brackets 101.36 to 101.55, and the high was 101.42, and right now we see prices are coming down again, and there's every likelihood the market will go down below 142 towards possibly 100.13 to maybe even below the 100 round number to maybe as low as 99.64. So basically, I think the dollar is still under defensive. So if that's the case, we can see that the other currencies would have to go higher, and we can see that happening in sterling. Sterling this morning high is 126.14, and it's likely to go even higher. I think this bracket of prices about 127 is going to be where I think it will meet some kind of selling interest, although I am not sure this will be enough to cap this run. But basically, I'm already long, I'm prepared to take profit at 127. Okay, right now, the euro versus the dollar, okay, it's not as bullish, but I think the market may actually continue to edge higher based on its momentum itself. So if we have a rush up to 1.1126 to 1.1170, I think this will be area that will be quite conducive to take up short position rather than long position, as I envisage in the sterling. So basically, if for those who are very, very aggressive and want to sell euro versus the dollar, this could be an area of interest. For now, I'm just going to watch and see what is the reaction. If I get a very distinctive reversal signal when the market hit this pocket of prices, then I will be more than willing to take up a tentative short position. But unless it is distinctively a reversal pattern, I probably will not want to do anything for now. Okay. Over in the Aussie market, Aussie has really bottomed out at 0.6573 because my original target was 0.6565. It did not quite get there, but the market has already rebound quite significantly, and to this morning high as we are speaking at 0.6742. So if we do get a pullback here, this rise from 0.6573 may actually continue forward. So if we get a marginal pullback, let's say to 0.67, I think that could be an area of interest for another run up to the ideal target somewhere in between 0.6816 to 0.6875 levels. So for those who want to scalp, this could be an area of interest, okay, to the upside. Now, dollar yen is going to be very interesting because dollar yen, although I did not manage to sell between 137.30 to 137.90, the market may give us another chance if it rebound from 133.50 levels. I've been waiting for the rebound which never comes. So maybe tonight during the non-farm payroll, the market could be volatile and we could get a reaction, and hopefully that will be enough for dollar to actually recover back to somewhere around 135.65 to 136.15 levels to enable a short, because I think the market eventually is going to go down and test the 129.65 levels, which is a very, very steep drop. Okay, over in dollar Canadians, we have market right now moving very, very close to my target price of 1.3485. So for those who have not already sold, this is a lousy price to get in right now. So the only place we can expect is the prices continue to hit here and then rebound. But again, there is not going to be a superior entry here. So I'm just going to watch this as it unfolds. Now, over in Bitcoin, I'm a little bit bullish short term. The market has been gyrating from 27,000 to 30,000. And so you can see the market has been going up very sharply, pull back very sharply, and then go back up again, back down again. So it has been very volatile, but I think it may have found a recent bottom at 27,666, because you can see the lows are getting higher. So this is conducive to the upside. Okay, but of course, this rally that we are seeing up to now has not taken up the 30,000. But if it can do that and close above 30,000, it will be laying the stage for an extended run to perhaps 31,500, maybe even to 32,500. Whether or not this bracket of prices can cap this run is going to be irrelevant, because I'm going to get out at 31,500 because I'm really long within this bracket of prices here. Okay, so that's all I have for you for this week, and I will come back to you again on Monday. So in the meantime, you take care and have a great weekend ahead. Bye-bye.